550 years. 550. So question number 1, May 2021. So May 2021, question number 1, very easy question. May 2021, question number 1. So by saying easy question already, I'm wasting time, right? So we are told here, required, they want us to give them goodwill arising on the acquisition of S Limited and R Limited. B, consolidated statement of financial position for P Group as at 30th June. I have to underline that, 30th June, in accordance with the IFRS standards there. So I can see they have given me P Limited, the S Limited, R Limited. So they've given me statement of financial positions of 3 companies, total equity and liabilities down there. So you're told the following information is relevant in the preparation of the group financial statements, in the preparation of group financial statements of P Limited. On 1st of July 2018, so we have here 1st of July 2018, P Limited acquired the shares in S Limited. So we have P Limited acquiring shares in S Limited, ladies and gentlemen, 80%. 80% of the ordinary shares in S Limited. On this date, the fair value of the identifiable net assets, I'll not even complete reading that. I'll go straight away to note number 2. On 1st July 2017, P Limited, so we have here 1st of July. So we have here 1st of July 2017, the same, ladies and gentlemen, P Limited had acquired 5% of the ordinary shares of R Limited. So we have a company called R Limited. So this date, if I could write it up here, on this date here, 1st July 2017, we had acquired 5%. And treated this as an investment at fair value through P&L, which is very good, not OCI, in the financial statements to 30th June 2019. On 1st January 2020, so again, we have 1st January 2020, P Limited acquired a further 55%. Further 55%, this gives us what here, somebody? 60%. Total of 60%. Meaning, ladies and gentlemen, that S and R are what here? These are our subsidiaries in the group. These are subsidiaries in the group. They are subsidiaries in the group. So could you kindly give me the NCI percentage in R? The non-controlling interest in R and Ngapi? The non-controlling interest, of course, the 2 must add up to 100%, so that takes 40%. How about NCI in P? NCI in P is what percentage there? Is 20%. Thank you very much. Thank you very much. Great. Ladies and gentlemen, the moment I reach there, I'll be able to see, I can see the considerations given on the other page, right? Before note 3, I can see the considerations for R, right? So they want me to give them goodwill arising on the acquisition of S Limited and R Limited. So if it's a subsidiary, I must compute goodwill. So ndio nimwandikia hapa kipole tu goodwill. Hakuna kupanic, S Limited. Goodwill, S Limited. So goodwill for S Limited, what is the procedure? Goodwill, I'm looking at what I paid vis-a-vis what I got on the other side. What I paid vis-a-vis what I got on the other side. So what we paid, of course, we have the consideration. We have the consideration paid by parent. So the parent, in this case here, for its stake of 80%, the parent paid how much? The parent paid how much for the 80%? The parent paid how much for the 80%? Are you able to see, ladies and gentlemen, for S Limited, we're given in note 1. Note 1, they have said so many things about net assets. So if it's not given on note 1, please look at your assets, non-current assets up there. Non-current asset. Note 2100 is not what we paid Robert. Not Robert, but the other guy who had written earlier on. Your 2100, you need identifiable net assets. Come out that party express figure pale, meaning that you should go to your statement of financial position under non-current assets. You'll be able to see investment in S Limited. So investment in S Limited, the parent, of course, is P, which in this case here paid 1925 to acquire 80% in S. And then, ladies and gentlemen, we have the consideration here paid by NCI. NCI, we always look at the fair value of NCI. Is there anybody who is able to see a note? And remember, the moment you do with any figure, like now I've picked that 1925, it will be very important for me to tick it. right? The more the things I tick there, the better for me. So that now note number 3 will be able to see the NCI policy. It is P Group's policy to measure the NCI at fair value. The fair value of NCI in S Limited was 525. So then could you guys please give me the total consideration? Could you guys please give me the total consideration? Now, ladies and gentlemen, there is a favor I would want you to do for me. Is it possible I just share this solution with you? I share the solution with you, and then you stop writing at all. You simply watch what I'm doing. You stop writing at all. I share the solution with you, right? I share the solution with you, and then everybody stops writing because I don't want anybody to write anything. I want nobody to write anything. Yeah, let me just share the solution so that you can concentrate 100%. So that you can concentrate 100%. So ladies and gentlemen, here we are. I'm looking for this solution. Nobody is writing anything. If I see you writing anything, if I get you writing anything, I will ask you to bring your parent to school. I'm very serious. I'm very serious. May 2021. May 2021. I'll ask you to come with your parent to school. So we have the last great. And then we have the last one, the last one is a helicopter. Aya, so now kila mwanafunzi yako nayo, Sasa kazi yako wewe ni kuangalia tu, You can even open it and have it side by side. So as I do this, you're also checking. So could you then kindly give me the total consideration? Total consideration. Unasema ni 2450. Total consideration is 2450. Thank you very much. So this is what we paid for 100% of the subsidiary. But this subsidiary that we bought came with a net assets worth how much? Just like, for example, how you can pay dowry for a lady, 2 million Kenya shillings, and then you will have to evaluate what, in this case, ladies and gentlemen, is she coming on the table with. Very important for you to see whether there is goodwill or negative. So in this case here, what the subsidiary is coming with is the net assets. So less net assets at acquisition. Net assets at acquisition of S. Remember, even this fair value of NCI is always at acquisition. It is always at acquisition. Are you able to see the net assets at acquisition? Are you able to see the net assets at acquisition? Are you able to see the net assets here at acquisition? So net assets at acquisition, they have given us on this date in note number 1. On this date, the fair value of the identifiable net assets of these is 2100. 2100. So could you kindly, ladies and gentlemen, subtract there and give us the goodwill. Give us the goodwill at acquisition. Give us the goodwill at acquisition. Goodwill at acquisition. Inakuja ngapi somebody? 350, double underline. Why? Because I'll not even check this for any impairment because Roman 1 is so express. It asked me to get goodwill arising on acquisition of S Limited. So let me look for goodwill now arising for R. Lillian does not have the question paper. Is there somebody who can send Lillian this question paper? Is there somebody who can send Lillian the question paper? I would rather move a bit slower for you guys to be comfortable before I continue. Somebody in the groups there. But you guys, Lillian, honestly, amdeipata ile link iko na past paper zote. Nyinyi ndio mkipita, mkumbuke kuniletea ng'ombe ya white. Mkipita, sababu mtapita. Sababu ni kumaanisha hujakuwa ukifanya revision ya past paper yote, lakini uzuri utapita. So mkipita, that is a promise. And please don't be promise breakers. That's a promise you're keeping with me. Right? So have you gotten the paper? Somebody, have you gotten the paper now? Have you gotten the paper? Sasa hawataka kusema yes. Ngapi huoi? Mtapita. By the way, hizi ng'ombe zote 100 nikipiletea moja moja, tuseme kondoo ndio mzuri, tuseme kondoo. So hao wanafunzi wamepata ama hawajapata? Waki wananipeleka pole pole. Hao wanafunzi mmewasaidia, mmewatumia kwa group, mshawatumia kwa group, mshawatumia paper kwa group PDF, kwa group zote mbili. Kumbuka kuna group mbili, iko sasa. Thank you very much, iko sasa. Thank you very much, iko sasa. Sasa tuende katika R limited. R limited, remember, is a step acquisition. So mwanzo tulikuwa tunaangalia consideration. Thank you very much. So we have here R limited is a subsidiary as well. So R limited, unaangalia R limited, ladies and gentlemen, in terms of consideration paid for the 5%. Kama unakumbuka diagram yetu. Alafu unajua consideration that was paid for 5%, this was really paid long time ago. Ladies and gentlemen, if we had other percentage shareholding of this company initially, and then we move from control to, rather from no control to control, when we acquire the control, these 5% shares we have to be revalued. So this one has to be fair value at acquisition. Fair value at acquisition, not the old price that you paid. Shares keep on fluctuating. Ukiangalia woye, note number 2, kuna katebo wamekupatia hapo kabla note 3. Kuna table wamekuambia the consideration for the acquisition of the shares in R limited was as follows. You can see 1st July 2017, the 5%. Tulilipa pesa ngapi? Somebody, the 5% if you're following. That table given there before note 3. 1st July 2017, tulilipa 70 bob. Hapo lazima uweke kasta. Kwa sababu gani? Watakuambia hapo mbeleni kwamba during this date of acquiring control, there was fair valuation. Wakakuambia, ladies and gentlemen, look at the subsequent paragraph there before note 3. As at 1st January 2020, the fair value of the 5% of equity interest in R Limited was what? Here, somebody, was 175. So the question will be, do I use this 70 historical value of the 5% or the new value of this 5%? Which value should I use? Is it the new value, which is the fair value of the 5%, or the old value? Which value? New value. New value. Why do you want to use old yourself, honestly? So consideration paid for the 5%, remember this one here has to be revalued. So the new value here is 175. And then now we have here consideration paid by the parent. Consideration paid by parent for the, do you remember this 55% percentage? Do you still remember this 55% ownership of the parent? Yes. And this one here inanga mambo na revaluation. You take the consideration that was paid for the 55%. Mbesha shiga na, who is able to see the consideration paid there for the 55? It's given in this table before note number 3, 560. And then don't forget, ladies and gentlemen, these both of these are the parents' payments. These are the parents' payments. Please don't forget our consideration paid by NCI, which is the fair value of NCI in R. Fair value of NCI in R. So NCI fair value from note number 3. Are you able to see the fair value there? Wananiambia wini C, ananiambia ni 315. So our jamaa wote walilipa how much in form of what here, somebody, total consideration. Walilipa how much in terms of total consideration? Uki-add shiode. I'm recording this video, I should not be using that language. It is not a very good language for my videos in YouTube. 1050. Very good. So what about 910 for 1st January? What about 910 for 1st January? As at 1st January 2020, the fair value of the 5% equity interest in R Limited was 175 million. The fair value of the identifiable net assets of R Limited are as at 1st January was 910. You guys are confusing something very important. This is the total value that we paid to acquire R. So we shall be able to compare this figure on the other side vis-a-vis what here now the net assets that we acquired. So come here and less the net assets acquired ambao unauliza net assets at acquisition ambao ni 910. So you subtract kwa furaha, unapata ngapi oye? Unapata ngapi? 140. So could you kindly confirm from your marking scheme whether these are the figures that are given there? How could they give us 6 marks for this useless work? These guys are not serious. They don't know that we are doing our last papers here to become CPAK. They don't know that. They need to give us serious questions. 6 marks for this. I've not even, Okay. So can I move on to something different? Thank you very much. Look at part B of the question. Now, part B of the question, they want us to give them the consolidated statement of financial position for P Group at 30th June 2020 in accordance with international financial standards, like that. I told you, for you to be able to start doing especially the statement of financial position, you need net assets of the subsidiaries. There is no way I can do group consolidation of a statement of financial positions without, ladies and gentlemen, without knowing the net assets of the subsidiaries. So please come and give me the net assets of the sub. So we start with net assets of subsidiary S. Who can talk to me this evening? When they talk of net assets, ladies and gentlemen, what comes to your mind? When they talk of net assets, what comes to your mind? When they talk of net assets, what comes to your mind? Equity. And the equity components are very easy. We have your share capital. They're very easy. We have share capital. We have share premium. So you simply go to the equity components in your statement of financial position. So we have, ladies and gentlemen, share premium. I can see we have revaluation surplus here. I can see we have revaluation surplus. I can see I have retained earnings. And then I have what we call fair value adjustment. I can see I have fair value adjustment. So remember, I have to do this at acquisition and at reporting. I don't want to put, ladies and gentlemen, depreciation on fair value adjustment, simply because they have told me in some note there that whatever asset, ladies and gentlemen, that was fair valued is an asset that doesn't depreciate. Aya, tuanze kazi. So unaanza kazi straight away. Thanks, Millie. Unaanza kazi straight away. Nipatie figure kuandika pa share capital. Share capital of S. Hata ukitaka vizuri, unaanzanga kuziandika hapa at reporting. At reporting is the best. So give me the share capital of S at reporting. At reporting, oh yeah. I can see at the financial statement, at the financial report given there, we have ordinary share capital is 700. So ordinary share capital here, oh yeah, is 700. How about share premium of S at reporting? Share premium of S at reporting. I can see is 100. Share premium at S. Then we have revaluation surplus at reporting. Revaluation surplus at reporting here S. Please, you know Satan is real. Don't pick figures of R. Worst of them all is to pick figures of P. No. So we have here retained revaluation surplus. They're giving me a figure of 40 at reporting. Ladies and gentlemen, from there we have retained earnings. Retained earnings, is there somebody who can see retained earnings figure? It is 805. Ladies and gentlemen, listen and listen to me very well. Even before I go to fair value adjustment, there are things I have to do. There are things which are normally the same. Between acquisition and reporting. There are things that do not change at all. Like share capital, abracadabra will be 700. We have share premium between the two values will never change. Revaluation surplus, they have told us something very nice there. They have told us in note number 1, if we read together, on 1st July 2018, P Limited acquired 80% of the ordinary shares in S Limited. On this date, the fair value of the identifiable net assets of S Limited was 2,100. At acquisition, I must underline that, at acquisition, the retained earnings and the revaluation surplus of S Limited were 560 and 20. So the retained earnings and the revaluation surplus. So wanatuambia kwamba revaluation surplus at acquisition ni shigana. Is there somebody who is able to see 20? Great. And then we have retained earnings at acquisition, shigana. Retained earnings at acquisition, ningapi? 560. Thank you very much. And then, ladies and gentlemen, I knew that they have given me, these guys were crazy. They disturbed our students a little bit. They have given us the net assets of this subsidiary at acquisition. They have given us the net assets of the subsidiary at acquisition. What is the total figure of net assets at acquisition here? They are not talking to me. Very few people are talking to me. I don't know why. It is 2,100. Then the balancing figure must be the fair value adjustment. The balancing figure must be the fair value adjustment. So how do we get this balancing figure? We shall take this minus this minus this minus this minus that. Give us a fair value adjustment here. Give us a fair value adjustment. And then, you know, for fair value adjustment, we normally do ta-ta like that. Zinafanana. Fair value adjustment zinafanana. Fair value adjustment zinafanana namna hiyo. Fair value adjustment zinafanana namna hiyo. Sasa tusomeni kitu tuone. Right? Wanasema note number 1, the last sentence, that the excess of the fair value of the net assets is due to an increase in the value of non-depreciable land. That this fair value asset that was adjusted upwards, ladies and gentlemen, is learned. This is another language of telling us that, hey, you know what? Don't create depreciation on fair value adjustment here. Meaning that is it. Then could you kindly give me the net assets of this subsidiary at reporting? Who can add this for me very first? The net assets of the subsidiary at reporting. Somebody is telling me it is 2365. 2365. Can somebody remind us? We are going to get the difference between these two numbers. We shall get the difference between these two numbers. We shall get the difference between these two numbers. We shall get the difference between these two numbers. Is there somebody who can remember the difference between those two numbers? The difference between those two numbers, ladies and gentlemen, the difference between, can somebody help me answer my own there? Can somebody help me answer my own? They've told us in the question that this is land. Do you depreciate land? They've told us in note number 1, last sentence, the excess of the fair value of the net assets is due to an increase in the value of non-depreciable land. So no depreciation, thank you very much. So they're telling me that, Mwalimu, you know what? We know that to get POP, you take the difference between the two. So I'll come and talk of 2365 minus 2100, which gives us what figure, somebody here? Which gives us 265, which gives us 265. Remember, the full meaning of POP is post-acquisition profit. Post-acquisition profit, you have to split this into two. You must split this into two. You must give this to the two owners. Do you remember the percentages? So come and tell me this 265, the parent will take what percentage? The parent will take what percentage? The parent will take what percentage? 80%. So the parent takes 80%. And then, ladies and gentlemen, we have NCI taking 20%. So could you kindly give me these figures? So what is 80% of 265? 212. And then the NCI will take 20% of 265. 20% of 265, which is 50 what here? 53. 20% of 265, which is 53. Ladies and gentlemen, now I can see very fast that I'm going to complete my question here in record time. Trust you me. So I don't know whether there is anybody who has a question up to here. Anybody who has a question up to here? Anybody who has a question up to here? Then kindly help me do the net assets of this other subsidiary. Kindly help me do the net assets of this other. So, however, I can even do some other working here. Ladies and gentlemen, listen here. Listen here. Because I've gotten the NCI profit, I can come and do the NCI of S working. NCI of S working. So NCI of S working, I'll take the NCI at acquisition. What was the fair value of NCI of S at acquisition? Is there somebody who can remind me? The NCI at acquisition, I know this figure is very fast. NCI at acquisition, NCI at acquisition. Mnasema ni ngapi somebody? Mnasema ni 525. And then now we give them their share of what here? Share of POP. Give them their share of POP, their share of post-acquisition profit, which is how much here, somebody? Which is 53. So then what is the closing NCI that I'll take to the balance sheet? So 525 plus 53. Wanasema ni 578. Wanasema ni 578. Great. If you go to your workings in the past paper, you'll be able to see the NCI of S. Now let's work with the net assets of subsidiary R. Net assets of subsidiary R. My workings are very easy. My body is very easy. The net assets, the net assets, the net assets. I know I'm quite fast, but we are overcoming. So the net assets of subsidiary R. Now we are looking at subsidiary R. Now we are looking at subsidiary R. Are you able to see the share capital of R now? Abracadabra. Are you able to see the share capital of R? At reporting, somebody share capital of R ni ngapi? Aki wataka kuniongelesha uoye ni 350. Share premium wamesema ni dash. Evaluation surplus wakasema ni dash. Retained earnings wamesema ni ngapi? Retained earnings ni 665. Retained earnings ni 600 what year? 665. So please, share capital, I know this one here will be 350. So share premium ni tata. Revaluation surplus ukiona pale hakuna at reporting, hata hapa iwezi kakuwa. Unless watupatie more information about what here any impairment. Any impairment. For now, tuweke dash namna hiyo. Ladies and gentlemen, after that, I will be able to come and pick the retained earnings. Retained earnings, ladies and gentlemen, at the acquisition ya R ni ngapi? Retained earnings at acquisition ya R ni ngapi? Oye, akiwataka kuniongelesha. Yeah, tuende pole pole Mayom. Mayom, you are so worried. Just look at this. Look at what I'm doing. Don't worry. Don't worry. It's low hanging. Because how many students in Kenya will even be able to know how to handle evaluations? How many? Great. Just focus. Great. So, mnasema retained earnings at acquisition is 500 what year? 20. Now, let us get to know what really is in this. What do we have? What do we have in this fair value adjustment? In the fair value adjustment, is there any place they have told us? Note number 4. Note number 4. Note number 4. P Limited purchased an item of PPE 1st July 2018 for 300. It had an expected useful life of 20 years and is depreciated on a straight line basis. Nope, that's not the one. Is there anything they are telling us about fair value of R? Fair value of R. Anybody who is able to see the fair value of R? Pata potea. Any note where they are giving us fair value of R? Kunayo makuna. Note 2, fair value of R. Fair value of R. So note 2, on 1st July, P Limited had acquired 5% of the ordinary shares of R and treated this investment at fair value through P&L. On 1st January 2020, P Limited acquired a further 55% of R. Sio your fair value wewe. Sio fair value. Na ngoja nisikize. Note 3. Note 3. So note 3 we are told it's P group policy to measure NCI at fair value. The fair value of NCI is 525 and the fair value of NCI in R is 315 at the respective. Then amkamati maneno. Amkamati maneno. Kwa unasema fair value of NCI letu hapa international disaster. International disaster. International disaster. Nimejua note 2 sentence ya mwisho. Note 2 sentence ya mwisho. The excess of the fair value of the net assets is due to an increase in the value of plant with a remaining economic useful life over how many years? Of 4 years. Of 4 years. Now, ladies and gentlemen, could you kindly then come and give me the total net assets here at acquisition? The total net assets at acquisition here. Hii tumepatiwa. The total net assets of R at acquisition. This one they have given us. This one they have given us. The total net assets of R at acquisition. Wamesema 910. Then what is the fair value adjustment? Could you kindly give me the fair value adjustment? Kindly give me the fair value adjustment. Wananiambia ukichukua 910 minus this, yeah, inakuja 40. Alafu kumbuka, wametuambia this is a plant item. It's a machine. So if it's a machine, then we must do fair value adjustment, depreciation, yes. Depreciation. So how do we depreciate this? To depreciate this, they have given me the remaining economic life. So it will be 40 divided by how many years have they given us, ladies and gentlemen? How many years have they given us? 4 years. But now I need to know whether since from the time I gained control, did I stay with this organization for a whole year? If not a whole year, how many months did I stay with this organization since from the date I gained control? Remember, I gained control on 1st January 2020. I gained control on 1st, so the date of control, the date that we shall consider, which is the date of acquisition DOA, the DOA here, the date of acquisition, ladies and gentlemen, when we gained control is 1st January, is 1st January 2020. And then the date of the financial statements, DOF, the date of the financial statements given here is 30th June, 2020. So how many months do we have in between here, ladies? Ladies, they are very correct, 6 months. So remember that this is an income statement item. It has to be prorated. It has to be prorated. So you take 40 over 4 times 6 over 12, which gives me how much, ladies and gentlemen? Which gives me how much? Which gives me, somebody's telling me, this gives me 5. And remember, this is a deductible item. It's a deductible item. So then could you kindly come and give me the net assets of this subsidiary at reporting? Net assets of the subsidiary at reporting. How much do we have there, somebody? At reporting, how much do we have? A beautiful figure, 1010. So then what is the difference between the two? What is the POP? What is the POP? The difference between the two. Wanasema ni 1050. Oye, Mili amekataa, amesema ati 1050. Inafaa kuwa 1050 ama 1010. Inafaa kuwa 1050 ama 1010. Mili, angalia hesabu vizuri. Sema tu 350 plus 665 minus 5. Minus 5. I know what they're saying. This value, fair value adjustment ni tata. This is tata like that. I'm so useless. Tata. Thank you very much, Millie. Fair value adjustment must apply in both. Thank you, Gladys. Great. So sasa inakuja inakuwa ngapi oye? Inakuja inakuwa 10. Oye, niambieni hapa inakuja 1050. Thank you very much. So then after I've done that, now you can very comfortably look at go there very comfortably, and then you look at what we call, what, ladies and gentlemen? You look at the POP. Look at the POP. So for the POP, what do I have there for the POP? For the POP, subtract. For the POP, una subtract, unasema oye 1050 minus 910. Na masaa zangu zimeisha, lakini sasa mtanisamea. Mimi ni baba yako, huwezi nifanyia kitu yote. 1050 minus 950 inakuja 140. So hii 140 unagawa. Unasema parenti shigana. Unakumbuka percentages za R kweli? Parenti 64. Parenti 64 Kilvo. Kilvo ananiambia 64. Parent 64. 60%. 60%. Parenti is 60%. 60% of 140 inakuja ngapi, somebody? Parenti 60% inakuja 84, 84. So inakuja 84 like that. Alafu tuko na, ladies and gentlemen, tuko na NCIE. NCIE ni 40%. NCIE ni 40%, which gives me 56. Thank you very much, Zamzam. So kutoka hapo sasa uoye, nikiwa mimi nafanya, namwandikia hapa NCIE. NCIE in R for purposes of reporting. So namwambia NCI for R of R at acquisition ni. At acquisition, what was the NCI ya R at acquisition? Ya R at acquisition, NCI ilikuwa inakuja ngapi? Ilikuwa inakuja 300 what ya 15. Alafu nasema what ya add what? Somebody if you are following. Inakuja nasema add who? Add who? Add who? Add who? Share of pop. Unasema add share of pop. Add share of pop ya ngapi? Add share of pop ya ngapi? Ya 56. Kwa hivyo NCI at reporting inakuja na kuwa ngapi? NCI at reporting inakuja na kuwa 300 what ya 71. Ladies and gentlemen, the moment I've got these figures now, look at what I will do. Nitakuja hapa kwa furaha. Can I rub this? Can I rub this? Can I rub this? And I can see students who are so sad. I can see students who are so sad here. I don't know why. Is there anything that is threatening your life? Is there anything that is threatening your life, ladies and gentlemen? Do you have any threat against your life? We shall overcome. We shall overcome. We shall overcome. We shall overcome. Kesho utakuwa unaangalia pepa, unashangaa masiku zote umekuwa ukiogopa nini? There is nothing really to be feared there. Nothing really. There is nothing really. Malaria, we shall overcome. Thank you very much. Yes, we have prayers from 7 p.m. Yes, we have prayers from 7 p.m. Yes, from 7 p.m. Nitawaombea sana, naomba mwenyewe, nitawaombea sana. Winnie, what's your story ya results kwanza? Kumbuka after exam, lazima tupigie mwili pole. Mnakumbuka? Lazima tupigie mwili pole. Results ziko mbaya. Ziko mbali. Tuachane nao kabisa. Usifikiri results hizo ni mambo mbaya. Usifikiri results hizi. Sasa unakuja unaandika jina kubwa, unasema P group. Unaona hivi? Unasema P group consolidated statement of financial position as at tumio at kwa mtihani at the date given there 30th June 2020. Alafu una underline letter ruler to pass below like that. Una underline mzuri kabisa like that. Great. Unamwandikia ni kama unajua wanafunzi ambao wanajua mambo ya consolidation, kwanza unajua una copy kitu limeandikwa tu pale tu, unaona? Unakuja hapo unaandika, una copy faithfully unasema assets. Right? Ukisema assets, unajua unaanza na una copy tu faithfully hata kama uelewi chochote. Badala ya kuangalia ceiling kwa exam, unasema non-current assets faithfully. Na underline, unaanza na ya kwanza property, plant and equipment. Faithfully. Aya. For investment in S and investment in R. Remember, these are what year? These are our subsidiaries, isn't it? These are our subsidiaries. Can we hold investment in our subsidiaries in our books really? When you're consolidating, inakuwa ni goodwill, isn't it? So hapo unakuja unaandika goodwill. So unazicombine. Wewe sema ati goodwill in R and goodwill in S. Hebu kumbusheni mwalimu, goodwill ilikuwa namna gani? Ya kampuni ya kwanza ilikuwaje? Oye. Ya kampuni ya kwanza goodwill ilikuwa ngapi? Ilikuwa 350 plus goodwill ya kampuni ya pili ni ngapi somebody? Goodwill ya kampuni 140. Kwa hivyo total goodwill inakuja ngapi somebody? 350 plus 140 inakuja ngapi? Oye. 350 plus 140 inakuja 40 what ya 49. Hapana, kama 490 wewe niki 490. Thank you so much. Now after that, ladies and gentlemen, we have what they are calling financial assets. Like now financial assets hii ni free mark. Hakuna kitu utapata ati working ya financial assets. Hii ni kuchukua na add siku consolidate ni kuweka pamoja. Wewe hata ukasirika the entire weke hizo figures zote pamoja. So long as sio foreign subsidiary. You know kama foreign subsidiary you must translate, isn't it? Iko mwingine nilimwambia yake figure pamoja. Yeye akaweka zo, yani ana add Zambian kwacha na Kenya shilling. Atamwambia yake na mwalimu zote pamoja, inakuwa international disaster. So financial assets pale woye tunasema ni 315 plus 210 plus 490. Nipatie figure niandike hapa mimi. Hii hata ina adjustment. Ni kama tax, haina adjustment. Inakuja 1015 namna. You can even start marking for yourself. Mark namna hiyo. Haya, unakuja kwa current assets. Current assets, this was a very easy question. Hakuna mahali mimi nimeona wamesema ati there was any intragroup. So tunaanza pale na inventories. So inventory, kama hakuna mambo ya intragroup, kama hakuna mambo ya intragroup transaction, hakuna mambo ya UPS na nini, so inventory nitachukua 315. Kumbuka, why am I consolidating them together? It's because this is a parent and subsidiary. A parent and subsidiaries. Right? So itakuwa 315 plus 127 plus 127 plus what here somebody 218. Namna hiyo. Plus 218. Wengine wanauliza in case there is 600 what here somebody 660. Unaenda mbio unasema pale uoye receivables pia hakuna question kitu nasema mambo mengi pale. So receivables 170 plus 69 plus 118. Please nipatie figure. 357. Akini maki naingia. So utapata wanafunzi walifanya hii sitting hata wako wanaandika chochote, imagine. Pako unawahurumia. Aha. Aya. So unaendelea mbele, ladies and gentlemen, go to the next one. The next one wanasema namna gani woye? The next one wanasemaje? The next one after receivables ni cash and the cash equivalents. So we have here cash and the cash equivalents. We have cash and the cash equivalents. Oh, wanataka angalieni hapa. Kumbukeni hii ni balance sheet. Balance sheet. Watu tunaanza kusema ati 6/12 kweli kwa balance sheet. Kwa balance sheet. Oh yeah, it's good we did this question. Remember, balance sheet is at just one, it's a positional statement. One day. Hiyo ni kwa income statement. Zamzam ndio umeanza story mbaya Zamzam hapa. Zamzam. Balance sheet hakuna prorate. The only thing unaweza prorate ya balance sheet maybe depreciation ama something. Only deprorate kwa P&L. Hiyo ni kwa income statement. Thank you very much. So cash and cash equivalents, I know this cash and cash equivalents, we could only have some adjustments if there was some cash which was in transit. Any cash which is in transit normally cannot be seen by any of the two independent companies, but the eyes of the group are big. So for cash and cash equivalents, please come here, give us 120 plus 49 plus 84, which gives us what figure? Somebody here, please talk to me. 253. Asante sana. So unaenda mbele, unaacha space kidogo sababu baadaye unaweza kaongeza kitu, isn't it? Unaacha space kidogo. So now I'm through with my assets. Now I'll come for PPE later. Nitakuonyesha PPE kwa lezeweka hapa PPE. Kwanza tuachane nayo. So tuende straight away pale kwa mambo ya financing. So financing unaandika equity and liabilities, and then you smile like somebody is going to become a CPA Kenya. You smile. So equity and liabilities, unaanza na share capital. So what do you know about share capital, ladies and gentlemen? We only take which one? Somebody. Parent only. Kwa furaha, parent only. So parent only, share capital parent only ni ngapi? Somebody parent only. Oh, yata wataka kuniongeleza. 1,000. Thank you so much. Pia tuko na share premium. So share premium, what do I have there? Share premium, what do I have there? I have a 400, the parent only as well. Parent only as well. So we have what, somebody there? We have 400. From there, ladies and gentlemen, we have the revaluation surplus. We have revaluation surplus. Bodi yangu imekuwa ndogo. Darudi baadaye, lakini sasa lazima nivute pande nyingine. So what do you know about revaluation surplus for the low-hanging fruits? For the low-hanging fruits, this is an equity component. Equity component, ladies and gentlemen, ukishana na mambo ya equity component, wewe chukua ya parent only kwanza. Hiyo ni revaluation. Retained earnings nitakuwa balancing figure. Lakini unajua kuna revaluation surplus. So revaluation surplus, please, this is an equity component. Chukua ya parent only, although for revaluation surplus we normally do some adjustment. Lakini kwa sasa wewe jifanye ni kama ushikanishi wewe kuja tusema wapi 95. Although for revaluation surplus we shall do in this case some working. Sasa Karo, sasa hatuwezi tukaandika Karo tena ameandika ile jina yake na small letters. Karo iko shida gani? Karo mimi naangalia ukue CS very soon tuko naandika jina na small letter. It doesn't matter. It matters. It matters. Yeah. So revaluation surplus andika namna hiyo ama muandikia hapa namna hii working. Sababu hiyo lazima working. Na hii working mimi sitafanya hizi workings. Hizi working wacha yeye mwenyewe afanye namna gani? Aende afanye peke yake hata yapate kitu ya kufanya. Mark examiner. Ladies and gentlemen, after revaluation surplus, I can see retained earnings. Now these retained earnings normally in your balancing figure woye, in your balancing figure. Hata hiyo sitaifanya, tumwachia hapo. Haya, niende kwa non-current liabilities. Non-current liabilities, there is a loan. There is an 8% loan. 8% loan. So the 8% loan, I'm taking 1,700. I'm consolidating. I'm putting together 1,700 plus 500 plus 475. Sikusoma note yote ambayo inasema kuna loan which is an intra-owing. Wanasema 2675. 2675. Thank you so much. From there, ladies and gentlemen, we have the deferred tax. Kwa tax hii ya consolidation hata ina kuadjust, haina deferred tax hata kama ni current tax. Hainanga mambo mengi. So deferred tax una consolidate, you consolidate 655 plus 200 plus what ya somebody plus 260 unanipatia figure inakuja ngapi somebody? Yes, NCI kwa equity uko juu. Mambo inakuwa mingi. Hiyo kwanza ni kitu mzuri sana hiyo. Sasa hata siestaka hiyo ni max ya free. NCI kwa equity kwa financing. So NCI kulikuwa na figure mbili. Hebu nipatie tu add hapa NCI woye. NCI kulikuwa na figure mbili za NCI. Hebu nipatie hizo NCI figure mbili to add. Wanasema ni 578. 578 plus who? Plus 571. 578 plus 371, sorry. Plus 371. So ukiongeza tunapata ngapi? 949. You know, you can even mark for yourself. Naambia examiner this is correct na kalamu ya blue, lakini hii unamsaidia kuweka wrong. Hata kienda kumark mwenyewe anakuwa na kazi rahisi. Yeah. And I'm doing a SWOT analysis of my answer. A SWOT analysis of my answer. I'm doing a SWOT analysis of my answer. Kama sasa ni correct. Nipatie deferred tax. Deferred tax inakuja namna gani? Deferred tax inakuja namna gani? Deferred tax inakuja 1115. Thank you very much. From there, ladies and gentlemen, we have current liabilities. Current liabilities. So current liabilities, we start with the trade payables. Trade payables, hakuna any intra-owing. Ni ongeza tu your 570 plus 135 plus 45 plus 45 plus 45. Inakuja inakuwa 700 and who? 750. Hiyo ni payable C. Kuna current tax. Current tax, please niongezee 575 plus 75 plus 25. Inakuja inakuwa ngapi? Somebody 675 like that. 675. So I would want to go back to the PPE, but before I do that, please get your marking scheme. You will see something very interesting in your marking scheme. You may not, I don't want you to go and get everything, because I also don't want students who are perfect. I'm also not perfect. But I would want you to get out your marking scheme and try to see the figures that you could have easily gotten. You count the ticks, you know, that normally give you. You count the ticks, you count the ticks, you count the ticks, you count the ticks. So, ladies and gentlemen, katika PPE, there is a very important note here. Evaluations, isn't it? There is a very important note, which is note number 4. P Limited purchased an item of property, plant, and equipment on first. No. Yes. P Limited purchased an item of property, plant, and equipment on 1st July 2018 for shillings 300 million. It had an expected useful life of 20 years and is depreciated on the straight line basis. On 30th June 2019, the item was revalued at 2 shillings 380. As at 30th June 2020, impairment indicators triggered an impairment review of PPE whose recoverable amount was 270 million. The only accounting entry blah 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 blah. So hiyo ni a bit complicated, lakini utakuja hapa kwanza, hiyo itabidi PPE, mimi napenda kufanya PPE kwa T account. So nitakuja hapa niseme PPE limited purchase an item, so 1st July. So we have 1st July 2018. So we purchased here an asset, worth 300 million. So bank 300 million. So on the same year, of course, there must be depreciation. They have told us depreciation is straight line. How many years do we have here, somebody? 20 years. So could you kindly give me this 300 divided by 20? This gives me how much depreciation? 150. So then what is the balance carried down? What is the balance carried down? What is the balance carried down here? PPE, which was bought here, 300. 300. Balance carried down. Oh, mnasema ni balance carried down 50. Ngoja hii na hii. Oh, ni 15. So 300 minus 15 gives me 285. So this automatically becomes balance brought down. Balance brought down of 285. Balance brought down of 285. Balance brought down of 285. Great. So naendelea kusoma hapo, wanasema then on 30th June, remember this is next year. This is like 1st July 2019, which basically is the same as what year? 30th June. Same as 30th June 2019. Same date, end, beginning. So wanasema on this date, ladies and gentlemen, what happened? Wanasema on this date, wanasema on 30th June 2019, the item was revalued to 380. The item was revalued to 380. So meaning that at the end of the day, the balance carried down here will be 380. So is there somebody who can give me this revaluation surplus? Very important. Very important. 380 here. Is there somebody who can give me this revaluation surplus? Revaluation surplus. How much? 95. Thank you very much. The revaluation surplus there is 95. The revaluation surplus there is 95. So please bring this amount here. Balance brought down. That is now 1st July 2020, when we are doing what here? When we are doing basically our financial statements. So this is 380 here. Balance brought down. Then what happened here on this particular date? Wanasema as of 30th June, impairment indicators triggered an impairment review of the PPE whose recoverable amount was 270. So we are told, ladies and gentlemen, immediately here there is a problem. Immediately here, the value of this asset reduces drastically. It reduces to what your recoverable amount, we are told, is 270. Remember, I'm doing this as at the same date, right? Meaning, ladies and gentlemen, that there is an impairment loss of how much? There is an impairment loss of how much here, somebody? What is the difference between this and this? Impairment loss, 380. Please use your calculator, Purity. Use your calculator, please. 380 and 270. Nimejua mistake. Ngoja kidogo. Ngoja kidogo. Hatukudepreciate. What is 285 plus 95? This 380 was not depreciated, right? Hatukudepreciate hapa. I'm sorry, hatukudepreciate hapa. So depreciation inafaa kuwa ngapi? Depreciation here. Depreciation inafaa kuwa ngapi? 15 kweli? Hapana uongo. Depreciation hapa inafaa kuwa 380 divided by 19 years. Because when you revalue an asset, you start counting what year? You start counting afresh. Not 20 years. When you revalue an asset, you start, we talk of remaining useful life after evaluation. We talk of remaining useful life after evaluation. We talk of remaining useful life after evaluation. after evaluation, after evaluation, after evaluation. So abracadabra, abracadabra, what do we have there? Abracadabra. Abracadabra. Wanasema vipi somebody? Wanasema vipi? E depreciation. Wanasema inakuja 20, eh? Inakuja 20. Depreciation here should be what here? Should be 20. Depreciation there should be 20. Should be 20. Now listen and listen to me very well. How did I get? First of all, I would want you to understand here. Let me remove this 380 there. Let me remove this 380 there. Let me remove that 380 there. I would want you to understand this. We are told here in this particular year that our asset value moved from 285 to 300 and what year, somebody? To 380. So then we had this revaluation. So it's like here we had a total figure of 380. So then the revaluation automatically will be what year? 380 minus 285 will be 95. That one is not in doubt. But now the balance carried down now becomes what year, somebody? I wish we had the time, but hakuna time. The balance carried down becomes 360. So this 360 is what we bring here now. 360. Vis-a-vis, ladies and gentlemen, vis-a-vis, ladies and gentlemen, vis-a-vis, if you look at this, vis-a-vis, this other figure here, they are calling it recoverable amount. Vis-a-vis a recoverable amount of 270 years. So of course, when you compare the carrying value versus recoverable amount, then you should be able to get what we call what here, somebody? This is an impairment loss. So impairment loss yangapi? Impairment loss yangapi sasa? Impairment loss yangapi? Yes, this is the figure that I was looking for. Impairment loss ya 90. Impairment loss ya 90. Unajua kama sasa hii sio low hanging fruit. Wanafunzi wote 90% of the students in Kenya hawezi wakafanya hii account. Hawezi wakafanya hii account. Ngita sikutaka kuwaonyesha hiyo. Nona. Lakini sasa sababu umeweza kufanya paka hapo ukapata impairment loss ya 90, look at how my PPE now will look in the financial statement there. Yes. So unasema PPE, ladies and gentlemen, unaenda kukatika consolidation ya PPE kule, wamekupatia PPE kuna 3920 plus, ladies and gentlemen, we have PPE ya S limited of 2100 plus 910. Is there anybody who is able to see fair value adjustments? Fair value adjustment ya S ilikuwa ngapi? Fair value adjustment, the increase ilikuwa ngapi? Akiwoye niko peke yangu lakini I will overcome. Please go to the fair value adjustment. Go to the fair value adjustment. Ilikuwa ni 40. Fair value adjustment ilikuwa ni 40 ya S. Ya RJ wame confused lakini sawa. Fair value adjustment. Please go to the fair value adjustment. The fair value adjustment ya subsidiary. The fair value adjustment ya S ilikuwa ni 720. Naambiwa kwamba ya S ilikuwa ni 720, alafu ya RJ ya R ni 40, alafu kulikuwa na any subsidiary which had fair value depreciation. Hiyo lazima utoe. Which had fair value, unasema yes, fair value depreciation of how much? Is it 4? 4 ama 2? Is it 4 ama 2? Wanasema 5. So minus 5. And then of course minus the impairment loss in 2020. Minus the impairment loss in 2020. Tunajua sana wanafunzi. Wacha niwaambie siri. Wacha niwaibie. Hata sisi zaidi tukiwa examiners, tunajua sana. Tunajua mwanafunzi kufika hii, aseme hii plus hii, aseme plus hii mafia ni rahisi. Lakini sababu tunamtafutilia kama mark tumwangushe, una introduce working ya hii. Unaona hii? Sasa kitu kimoja tu, Karamonyoro inakuwa international disaster. How many marks ya PPE? Hebu angalia kwa marking scheme. Angalia marking scheme. PPE iko na marks ngapi? Mwanafunzi wa Kareja anajua PPE iko na marks ngapi. Hebu angalia kwa marking scheme. PPE iko na marks ngapi? PPE iko na marks ngapi kwa marking scheme? Tick ni moja tu, emwe hiyo kazi yote. Emwe. Mimi siwezi enda go through. Kwanza nikishaanza kusikia kwamba there is an asset of PPE which has got these fluctuations, that is something that I run away from. It is something that I ran away from. So, ladies and gentlemen, that is what you do in that exam. And you'll be surprised. We are very fair when it comes to marking. Ukirealize mwanafunzi anapata like 10 marks, like 10 marks out of whatever, watasema mpatie zote. Watasema mpatie zote. PPE. Lakini unajua, kumbuka hapa amjanipata vizuri Kelvin, Unajua kwa PPE, like now this is the only question in the past paper ambayo iko na hii kitu ya E90. Zingine zote ni direct. Sijasema usiende kufanya PPE. Hii ndio the only question iko na adjustment ka PPE. Otherwise zinakuwa direct. Zinakuwa direct namna hiyo. Aya, nauliza swali sasa. Where did you get 5 at PPE? Hebu jibu Mayom 5. Ukikosa PPE, hata ukianguka zote. Si nimewapatia marking scheme ya CASNEB. Why did I give you marking scheme ya CASNEB? Niweze kuona low hanging fruits. Low hanging fruits. Wewe mimi naona matik mingi sana. Thank you very much. Mayom, what are details? What are details hizo? Hizo kitu wachana nayo. PPE, the whole of it, wachana nayo. Ama unatafuta award. Is there any student who is looking for an award there? Is there a student who is looking for an award? Those are enough. So, ladies and gentlemen, what we shall do is to meet after our prayers. Our prayers are going to be very short. Tuende kwanza prayers.